Well, Scott, the White House had proposed broad new tax information reporting requirements, and the Treasury Department said today that would include not just cryptocurrencies, but also crypto asset exchange accounts and payment services, and for businesses that receive crypto assets of $10,000 or more. Now, the Treasury Department is also projecting that it could lose out on $7 trillion worth of unpaid taxes over the next decade. That's roughly 15% of taxes owed. That tax gap was $584 billion in 2019, according to Treasury estimates released today. The bulk of that money was misreporting from income from sources like capital gains, partnerships, family farms. The Biden administration proposing to spend $80 billion to beef up IRS enforcement, specifically of wealthy households and corporations. Treasury projects that would allow it to capture $700 billion in additional revenue this decade, as much as $1.6 trillion over the next decade. The White House also proposing those new tax reporting requirements and saying they're going to be needed because cryptocurrencies are going to be so important as a unit of exchange in the decades to come.
Here's the great news. You won't have to wait until your next year's tax return to get that break. I'm announcing today that on July 15th and the 15th of every month thereafter throughout the year, you will get deposited in your bank account half of your tax cut, at least $250 per child each month, a direct deposit into your account. So if you're a working family with 2 kids, you're going to get $500 a month into your bank account on the 15th of every month starting July. We're getting and we are getting you a tax cut this year now when you need it and not have to wait. And if you get your tax cut refund deposited in your bank account automatically, this tax cut will be put into your account automatically.
In 2019, the Federal Reserve committed to building the FedNow service, which will enable banks to provide real-time or instant payments to their customers around the clock, 365 days a year, benefiting communities across America. Today, we are in the midst of a technological revolution that is fundamentally changing our world, reshaping how we communicate, access information, and purchase goods and services. As the central bank of the United States, the Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system. In pursuit of these core functions, we have been carefully monitoring and adapting to the technological innovations now transforming the world of payments, finance, and banking. The effective functioning of our economy requires that people have faith and confidence not only in the dollar, but also in the payment networks, banks, and other payment service providers that allow money to flow on a daily basis. Our focus is on ensuring a safe and efficient payment system that provides broad benefits to American households and businesses while also embracing innovation. Technological advances also offer new possibilities to central banks, including the Fed. In particular, technology now enables the development and issuance of central bank digital currencies, or CBDCs. A CBDC is a new type of central bank liability issued in digital form. While various structures and technologies might be used, a CBDC could be designed for use by the general public. To help stimulate broad conversation, the Federal Reserve Board will issue a discussion paper this summer outlining our current thinking on digital payments, with a particular focus on the benefits and risks associated with CBDC in the U.S. context. The paper represents the beginning of what will be a thoughtful and deliberative process. Irrespective of the conclusion we ultimately reach, we expect to play a leading role in developing international standards for CBDCs, engaging actively with central banks in other jurisdictions, as well as regulators and supervisors here in the United States throughout that process.
They got to crypto, they got to Archegos, which we'll get to a bit later in our show, but it was very interesting to listen
But they didn't, once again, Carl, did the chairman say, you know what, we got to stop this Dogecoin. This whole thing is ridiculous. No. I mean, kind of like Jay says, I can't take it anymore. Gensler did not stop it. No one's willing to stop it, Carl. No one's willing to say, okay, enough. Dogecoin does not exist as of now.
So it's Gary Cohn, it's Sheila Bair, Blythe Masters talking at LME Week last week about how commodity companies can use blockchain. What does that tell you about the validity of this going forward?
Well, I think it's the technology, blockchain technology, which the public all know is underlying Bitcoin, has a real chance to be a catalyst for change in the world of finance. And that's because it moves data, and it also applies code, computer code, across a decentralized network. So I think that's why you see the likes of Sheila and Gary Cohn, and even I'm teaching at MIT blockchain technology, and the class is crowded. There's a lot of people that want to know about this technology.
So how do you regulate it?
Well, it's really important, I think, for this, if it gets broad adoption, if we really think the crypto world's going to be part of the future, it needs to come inside a public policy envelope. That means we need to guard against illicit activity, and yes, we need to protect investors. The crypto exchanges, big exchanges like Coinbase, need to really come within either SEC or the CFTC, the agency I once was honored to chair, inside of something to protect investors.
Let's distinguish two things. One is cryptocurrency and the other is blockchain. Because cryptocurrency may rely upon blockchain, but you can do things with blockchain that you don't do with cryptocurrencies.
Right.
Do we need to regulate blockchain? Because we don't normally regulate computer programs. We don't regulate JavaScript.
David, I couldn't agree with you more. We should be technology neutral to promote innovation, but still in being technology neutral, I'm agreeing, not regulate the blockchain technology, but just ensure that its application, like cryptocurrency, investors are still protected. What does that mean? That we make sure there's not fraud and manipulation to the extent we can in the Bitcoin markets.
At the same time, this is to those of us who are not computer programmers, very sophisticated. It seems to be moving very, very fast, migrating. Do we have the personnel within the federal government to actually be able to understand this enough to really know whether there's fraud going on or what's going on?
Well, it's always a challenge. That was true when the internet came along in the 1990s as well, and you're right. But I don't think that means we give up. We still should try and protect investors. And then there's more confidence in markets. And where there's confidence in markets, then more people can participate.
What are the likelihood of a cryptocurrency futures options market?
Well, we already have something called a Bitcoin future on the Chicago Mercantile Exchange. There's even futures on some other contracts called Ether as well on overseas markets. Now, you're asking whether there be an option on that future. I think it's in our future, to excuse the expression, but it's somewhere in the next 6 or 18 months. I think it will be there.
How relevant will that be to then help form regulation? Like, what's the feedback loop for that?
Well, I think to the extent that the international regulators can assure for more confidence, that the viewers of this program can say, all right, I'm comfortable, I can do this, and big asset managers can invest, you'll see more potential adoption. But at the core, also the technology, David, blockchain technology, has to have a place. And right now it's more hype than reality. The largest uses are still quite small. And the technology, I think, is probably 3 years and maybe 5 to 10 years away from really being able to be scaled. Visa moves 25,000 transactions a second. Bitcoin moves 7 to 10 transactions a second. So there's still, but I'm an optimist. I think the scaling issues will come.
So assuming we will have the regulation you described, we're sort of like back in 1933 with securities. You know, where should that regulation come? I mean, you're obviously from the CFTC, you believe in the CFTC, but why there rather than the SEC, for example? Or maybe there's an entirely different new regulatory body.
I'll even be regulator neutral as well as technology neutral. I think the pure cash cryptocurrencies like Bitcoin need more protection, and probably more protection than, frankly, even the oil markets or corn and wheat. Whether that's the CFTC or the SEC, I'll be neutral. I think the CFTC has good skills. I think those crypto assets called initial coin offerings, that it's like the old duck test. If it quacks like a duck and waddles like a duck, it's a duck. These things are like initial public offerings.
What do you feel like is the appetite for other exchanges, other countries like South Korea, for example, to regulate as well?
So you see around the globe a lot of countries saying we have to guard against illicit activity. We have to ensure our tax base stays strong.
Sounds good. Everyone's going to want to say that, but
right,
the reality.
Right. But the reality is it's really hard to implement. It's really hard to implement. The investor protection side, I'd say it's all over the lot. There's small population countries like Malta that want to attract and say, come hither. They want the jobs. They want the CEOs to land there. And then some countries like China and India are very hesitant. And officially, they ban initial coin offerings. But underneath, the economy still is. There's a lot of people trading in Bitcoin.
So finally, Gary, how confident are you that we could have regulation without inhibiting the innovation? Because it's really in the nascent stage. It's very early going. I think a lot of people who are involved in Bitcoin and blockchain would say, don't hold us back.
They would. I would say you want some form of regulation. You want traffic lights and speed limits, because then the public is confident to drive on the roads, in this case, the crypto roads. Right. And so I think the two can coexist, but it will take a number of years to sort through and get the balance right.